Good morning, everyone, and welcome to the Quantum Leap morning market session and trade level setup for Monday, October the 21st, 2013. If you're new or watching from YouTube, the Quantum Leap is a self-organized learning environment. We've been around in one form or another for about 4 years. We are a private group. We run a Skype chat room. If you're interested in checking out the Quantum Leap chat room, it's a self-organized learning environment. You can open up a Skype account and send me a contact request at Doug_McKay. Each morning we come together and we go through a routine. So if you're watching on YouTube after the fact, you might want to skip ahead. We get into some very basic key numbers and look at the macro to the micro, and then we look at some trend charts, macro to the micro as well, and then we'll get into deeper analysis with volume profile and our other methods that we look at. But we do this routine because we're preparing ourselves for the trading day, so we don't skip them. It's something that we do each morning. We need to get the legals out of the way, so let's do that. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. And any trades that you see in Quantum Leap are for education purposes. Please trade your own plan, do your own due diligence. Alright, so the first thing that we do is we go through our homework numbers. We've been keeping this homework sheet now for several years, and basically we do market analysis off of this, but we take a look at where we are from the macro to the micro in terms of all the different levels we look at. Of course, we've got a brand new high that was put in overnight at 41.25, so I have to make that change here. This is put out in the evening. All right, so our year high, all-time high, 1741.25. We're nowhere near our year open or our year low. Our month open, 1678.50. We have a new month high at 1741.25. The green indicates that the numbers are increasing or trending. You can see that we've been trending with our month highs, for many months without making a lower monthly high. Our month low is 1640. Our previous month open 1640.25. Previous month high was that previous all-time high at 1726.75. Our previous month low 1630.75, and we closed at 1678.75, and of course we're trading way above that right now. Our week open last week at 1684. We had a high of 1740.25 and a low at 1680, and we closed at 1737. I thought it was 1736.50. We'll have to go take a quick look at that. Our quarter, of course, we've got a new quarter high. But going right into the intraday, we opened Friday 1727.50 in the Globex. We had a Globex high of 1734.75 and a Globex low of 1727, and we opened the RTH at 1733. We opened outside of range. We broke the IB to one side, to the upside for normal variation. Our opening swing high 1734.75, opening swing low 1732.50 for a 2.25 point opening swing. Our initial balance high 1736.25, initial balance low 1730.25. You can notice that our opens, our highs and lows, and our initial balances have all been increasing, and we've been in a very strong trend. 6-point initial balance range. Our 1230 number was higher at 1737.25. Our RTH high 1740.25. Our RTH low 1730.25, and we closed at 1736.50. Did you take the settlement number, Howard? You did take the settlement number for the month. Okay, that's correct. That's why it looked weird to me. Our RTH VPOC, volume point of control, 1734. Our ranges, 10 points for the RTH, exactly a 10 handle range. Our full session range, 13 1/4, and our Globex, 17 3/4. Full session high, 1740.25, put in the RTH. Full session low, 1727, put in the Globex. Our 20-day ATRs moved to 15 1/2 for the RTH, just over 9 1/4 for the full session, and just under 10 3/4 for the Globex. Our Globex open last night, Sunday night, and our week open 1738. Our European cash close on Friday, 1734.25. That's the 1030 number. All numbers in here are in Central. Our value area high was higher at 1737.50. Value area low was higher at 1730.50 for 7-point value area. And we broke the IB to the high side, outside of the pocket, way outside of the pocket. It looked like we had a possibility of having a normal day, except for the fact that we are running a pretty tight range of 6 points up until the time we broke that IB high. Our extended session high, 1738 1/4. Extended session low, 1736.50. And we had an extended session close and settlement at 1737 for a 1 3/4 point extended session, just under our 20-day ATR for the ETH. And we had 1.2 and 1.5 for volume, so pretty, respectable. And yet again, as I keep talking about, we went and put up a new all-time high in the Globex overnight. Seems to be a trend as of late. In terms of CHVNs, there's not a lot up here in terms of CHVNs and CLVNs because we're just, trading up in this area, for the last day and a half. So you really have to put the emphasis on the LVNs, and the big LVN that, you want to pay attention to is this 1735 1/4. Is that correct? It's 1736 1/4. I didn't think that was correct. I must have wrote that down wrong. This should be 6. This is the number that is my line in the sand right now, and we'll talk about it a little bit more when we get to the charts. Didn't take out any naked crosses because we'd never been up here, so there's nothing new from the RTH session on Friday. We have put a couple in overnight, and we'll go through those when we put our levels on the chart. Naked VPOC 1734. We had FOMC speaking this morning. But the big one is the existing homes at 9, so be careful in that first half hour of trading. Let's go over and take a look at the macro to micro. Of course, our monthly chart. We've got great slope and separation on the 9 and the 9 EMA and the 20. We've got price trading above last month's open, high, low, and close. This trend is very strong. I mean, it's just, we have not closed below the 9 EMA, not even really tested the 9 EMA all year. Prices paralleling this 9 EMA, extremely strong. Going over to the weekly, again, we thought we were seeing some weakness in a few weeks ago with that close below. That was the first close below the 9 and the 20. Then we bounced up on the the Fed no QE ending, and then we had government shutdown. They came down, looked like we were going to get another close below the 20, and the settle that, and bam, we pop right back up. We've got slope, we've got separation. We're trading right at the upper distribution from the prior week, and holding value up here. So very strong on the weekly. Going on over to the daily, we've gone parabolic on the daily. We're creating a pretty big technical gap. Technical gap is when the price moves away from the 9 EMA and leaves this gap. It's very rare that those gaps are not filled, and they're usually filled through consolidation and time, where the 9 EMA comes up and meets up with price, or it's closed by price coming down and meeting the 9 EMA, or up in this case. You can see here's a good example of a tech gap. A nice parabolic move, tech gap, and price moved up and closed the gap. And you can see time in and time again when you get these technical gaps, the market, this is a good example of closing through time and price. So just always keep an eye when you gap and you go parabolic away from the 9 EMA. But we've got slope, we've got separation. We do have a naked cross here at 1687.15, but it's on the daily, so it could be some time before we go down and close that. This is a study that I've been doing for several years now, where the 9 EMA crosses the 20 SMA, and the price action moves away from the cross and doesn't test it in the preceding or the following bars. The market has a high probability of coming out and taking out this, re-auctioning this level again. We watch them on the 5, the 15, and the 30 for our intraday trading, but I also watch them on the daily and longer term charts as well. Let's take a look at the geometric chart. Now I've added another fork based on this latest move. That's this new fork right here. But when we're looking at the long-term fork that we've been following for quite some time, we're looking at this energy point between the longer-term fork, the modified shift fork, and the downward sloping fork. We broke out. We hit that energy point. We're now above the center line of the long-term fork again, and we have broken above the center line of the modified shift that we added a few weeks ago, and we're trading up in the middle distribution of the longer term fork. If we do what I think we're going to do and we hold this new fork that that I added in, we should come down, and we should come down and test the center line of the modified upward sloping fork and the longer term upward sloping fork. And we've got two energy points to pay attention to. This one right here, 1731.96, and that looks like it's going to be around the 25th. And this one right here, this looks like to be around October 31st at 1725.26 area. Of course, we could continue the move and come up and test the upper line of the longer term fork, and that would bring us somewhere in that 1770 to 1780 area, which is one of the areas that we're watching. Of course, we've got a longer term energy point here up at that 1808, 1809 area. But that's a little bit further out, in around April, if this market continues to stay strong. Of course, we've got possible reversal and coming back down and testing these energy points down here, but they're a little bit away right now. My main thought is, do we come back down and test the center line of the downward sloping fork? To do that today, we'd have to go all the way down to 1721.40. Not likely to happen today, but anything's possible if we get a very strong reversal. Let's take a look at the intraday trends, see where we are coming into the RTH market. The 4-hour, we had created this tech gap. This is a good example of a tech gap closing through time, and we've just closed the gap, and we've now bounced off of it. We've got slope and separation, so the 4-hour is still looking very strong. Going down to the 30-minute. 30 minutes we've consolidated and we're going sideways. We had had a cross and we were trading down, but they this morning, early morning, they popped back up and they're now trading above the 9 and the 20, but we don't have slope and separation, so really not telling us much on the 30. So kind of some indecision coming into the RTH session. Taking a look at the the Globex, or the composite, I should say, you can see that we've had this big parabolic move in the last 3 days. We do have possible exhaustion gap. You've got your first gap, which is your runaway gap. Then you have the continuation gap, and this could be an exhaustive gap. anybody's guess, but we've got 3 unfilled gaps now in this latest up move. Prior history has shown us that when you get the 3 gaps, that it's possible that we get a severe reversal to come down and close those gaps, and we did that on that last move when we had the 3 gaps there, and we came back down and closed most the 2 of them, if not 3 of them. I'd have to go back and look. But in terms of the composite, there's really not. Sorry, this shirt's not being nice to me this morning. In terms of the composite, the composite is made up of one day, so you really have to go to the intraday, and that's where that 36.25 is my key line in the sand. We've been able to hold it pretty much overnight. We came down and tested the CHVN and HVN from the prior day. We came down overnight and tested that 35.25. They tried to push through and hold below the 36.25. They weren't able to do that. They popped back up. But if you look at the Globex, we've had pretty good balance, and they've been able to hold value in around this 37.50, which is basically, this upper distribution. Friday we had this double distribution where the upper distribution was pretty flat, which is not unexpected when it's a double distribution within a brand new area that's never been tested before, because there isn't any prior price history there. So basically you're going to get two-way action. Once they got up there and they held value, they couldn't decide, they couldn't find one that was most prominent. Now on Friday, the upward distribution HVN was 1737.75, and the value area high was 37.50. Overnight they found very strong that they liked that 37.50. You can see we broke through that 36.25, which is the key LVN from Friday, came down to the first lower HVN from Friday at 35.25, hit that to the tick, buyer stepped in, nice little hammer there, and popped back up, and came right back up to the value that they were holding for most of the night, and we currently have not traded back below that level in the last little while. So they're holding value higher as long as they're above 36. I think we see new highs. We've got the 41.25, which is the Globex. I think we'll possibly get a move to test that in the RTH. But if we get below the 36.25, then I'm looking for a move back towards the lower distribution, test that 35.25 again, but the main target below is that 1734 naked Deepak from yesterday. So let's move, or Friday, let's move our overnight numbers to our trading chart, our intraday. Of course, we've got an all-time new high and overnight high at 41.25, which is just above the Friday range and the all-time high that we put in at 40.25. We've got the overnight low down at 35.25, which is right at that first CHVN below the LVN, and then we've got the overnight VPOC at 37.50, which is right at Friday's value area high. So currently we're trading at 38.50. We still need to do some work in this area, but I think that 37.50 is going to be a bit of a magnet. We've got the close from the RTH gap that needs to be filled at 36.50, which is right there at that 36.25. This is going to be my main trade level for the day here. If we come down here, I'm looking to see if buyers step in here again and hold us in the upper distribution and reject this LVN and come back up and come to test the range high and take out the overnight high. 40.25 is going to be a area that I'll be looking to do business, to go and take out the overnight high and equalize the all-time high between the RTH and the Globex at 41 1/4. So I'm watching to see how they open at the RTH. We've still got some time. They could drift down lower and come closer to here. The closer they get to 36 1/4, 36.50, I'll be looking for the gap close and a test of the LVN and probability of taking out the overnight low. Of course, if we do come in here, I will be looking to see if they step in again at 35 1/4, but if they push through, I'd be looking for a move down to take out the naked VPOC at 34 and a move down to the value area low down here at 1730 1/4, 30.50, and the RTH range low from yesterday at 1730 1/4, and that's going to be an area I'll be looking to do business. And again, I'll be looking to see if buyers step in here and rotate it back up towards balance, or if they break out of the range and go down and test that lower range and the close. We have the naked close and the range high and the gap fill down here at 1728.50. If we see initiative buyers stepping in and they determine that 37.50 is is an area that is now fair value, I'll be looking for initiative buyers to step in here, push it up to the 1740 area and go and take out that 41, and of course go and make new highs. We've got the 1760 area and 1780 area, which are areas that I'm watching for some measured moves, and of course that key spot is that 1780. We've been talking about that for quite some time. So I mean, it's pretty much pay attention to what they did overnight and Friday, and pick your levels there. I think 35.50, 34, and 30 30 1/4 are going to be the levels below, and then above 37.50 and 40 1/4 I should say, and that 41.25. Taking a look at the Keltner, the center line 38 1/4. Get below that, then we can test the overnight VPOC and that 36 1/4. A move down to test the lower Keltner is going to bring you down here at 1732.25 and test that 34 naked VPOC. If we stay above this Keltner center line, a measured move right now is up at 1744 1/4, taking out the range high and the overnight high and the all-time high at 41 1/4. I mean, pretty straightforward, but I think it's going to be some choppy trading. So just keep it tight and make sure that you know where you're wrong quickly, because we're trading in uncharted territory right now. Taking a look at gold. Well, we talked about on Friday about that we had moved back up here to that 1318 microcomposite VPOC. Pretty much we've got balance in this area around this distribution on the composite. Currently we're trading just under it at 1770. So we could just get some more consolidation here. Numbers above you want to pay attention to is the 2340 value area high from this former microcomposite and the CHVN at 2420, with the other side of balance being up here at the 3725, which is the CLVN and also the test of the range high from that former microcomposite. Just above that, you've got the two key CLVNs at 4510 and 5170. The value area high from this prior microcomposite is 5740. So I'd be looking for a move up to test these two levels, and then we can break above that. Again, we've got 66 area and the big one above us up here at that 8680 and 88 level, where we traded in this balance area up here pretty strong for a while. If numbers to the low side, you want to pay attention to the 1304 area. If you had 1309, which was the microcomposite, the double distribution microcomposite down here that we talked about, that we came down and tested to find buyers the last time, that would be my first target below. And then below that, the 1304, 1300 centennial number, and that 1295.80 value area low from the prior microcomposite, but the big number being 1284, and then where we found buyers this last trip down, which was down here at this 1268, and in this distribution around 1280. I think we're going to see some chop in around here. We still have some undetermined fair value here, and whether or not we get a strong move during the RTH, I didn't see anything really strong overnight. So just watch these key levels if you're going to trade it, and again, keep it tight. That's what I'm looking at. Go ahead, Howard. We'll move over to you.
Go ahead and take a look at the weekly chart. First thing you see from last week is that we did get a weekly close above this 20-year monthly fork that we've been following. So that's a very strong signal on this time frame. Look to see if we hold above and this fork line becomes consistent. If we break back below, it could be a failed breakout at some point. The market strength the way it's been. That remains to be seen. Look at the daily. We can see that the 90 may have become support, and then the increase in strength of the market to pull away, and as I mentioned earlier, forming a bit of a tech gap. We've been walking along the Bollinger Band, starting to turn up, widen. So if we come down, good support will be back at this fork line and 90 in May, where they're about to come together. So looking at our market breadth, start with our sectors. We have pretty broad sector confirmation with price, with the exception of healthcare, which is this red one here, and with home builders, which was flat. But all the other sectors pretty much were moving with the general market. Still haven't changed back in toss. The changes were made. Hoping weekend's updates would work. So our advanced decline lines, we were looking at this point as potential peak for the advanced decline and up-down volume, where they did retrace a bit, but over the last few days of the week, they did make a new high. Both up-down volume and advanced declines are now above the midpoint of 50%, which is what this line here is. So there's more net advancing issues, and up volume is stronger than down volume. That's in confirmation of the price. And looking at the Dow transports versus industrials, we see nothing different. They're moving together, and the transports have been stronger than the industrials. And the industrials have been generally lagging the other markets recently. So, but no non-confirmations of note. And with that, we have no COT report again last Friday, so that's 3 straight weeks with no COT report, unfortunately. So with that, Doug, that's all I've got. I'll turn it back over to you.
Thank you, Howard. That's going to complete our morning market analysis and trade plan setup for Monday, October the 21st, 2013. As always, trade well, trade safe, and we'll catch you on the flip side.